And Group 5's first half headline earnings per share climbing 63% to 152 cents. Revenue from continuing operations increased by 16% to 5.1 billion rand. That's as a result of increased activity in the group's construction businesses. An interim dividend of 32 cents has been declared. That's up 45%. Well, Group 5, of course, those earnings coming through. And just looking at some of the response to that, we saw the share price rallying by around 5% post those results. And of course, the company also coming through and saying that they haven't made a provision as yet to the Competition Commission. For issues around for issues that are on the table right now. But let's delve into all of this, and I'm sure Mike Upton can explain that better for us. Group 5 CEO Mike Upton joining us, and Mia Kruger, Portfolio Manager at Kruger International. Mike, thank you very much for your time. So let's talk about, of course, the 63% rise. Fantastic earnings there to come to the market too. I'm sure shareholders, as we've seen from the market reaction today, are happy with those. But talk us through the various divisions in your business and what really drove that increase there.
Thank you very much. Nice to see the reaction, but I think also to understand that in the last financial year, we were able to deal with quite a lot of legacy issues which had dragged our organization down for a couple of years. One was our investment in construction materials, which is now for sale and sold, essentially. And the other one was, the impact it had on Group 5 of the bubble in the Middle East, where we had quite a lot of contracts that were cancelled and closed. And we've been dealing with that in terms of a commercial closeout ever since. So, that's certainly by the end of this half we're in now, which is likely to be quite a small effect, will be now behind us. So I suppose we are beginning from a lower base, but it is nice to be able to say, that's what we did it for. We actually cleaned up the organization. We refocused its strategy and its portfolio businesses to be aligned to the markets we see ahead of us. And that's coming through now in the results.
Now, just looking at the planned projects, the value of those, 124 billion rand, and that's compared with 144 billion rand a year ago. And what you're trying to illustrate there is you're choosing not to take on some projects, given that they might fall through. I'm sure you can explain that strategy better, but tell us about the more conservative approach you have right now.
There's two things in our announcement. One is what the order book is, that's the actual signed contracts. The other one is the pipeline, which is the world according to Group 5. And it's a filtered version of what we see out there. And it comprises of projects wherever they might be in terms of the sectors which we've chosen, with the client body we've chosen, and in line with our capacity to execute. And obviously it's a moving target because those projects move in and out. That's also multi-year, so 4 to 5 years view. And it's a big number, and obviously, we would only need a portion of that to actually make a difference to Group 5. So, as things become a little bit more clear, maybe in some markets, we're able to better filter them out. So hence, the absolute number actually is not the issue. It's, what is the number in terms of its mix? Where is it? And what sectors are beginning to come through? So if you analyze that pipeline, about 48% potentially of the future order book should come from Africa. And the hot market 48% as opposed to where we are now.
Future as in, can you give us a date?
3 to 5 years. I mean, over time, if that's a linear sort of relationship between pipeline and what comes into the order book, which may not necessarily be the case. It just gives us a view as to what's out there. Better to have some radar than no radar is the point. And then, what comes through is the African mining is still very strong, and the power markets and transport and oil and gas beginning to come through. And in the future, it looks like a bit less real estate. But that's couched by the fact that we've had quite a large intake of real estate in the last little while. So it's time for a rest there and those other markets to come through in our order book going forward.
Mike, you mentioned that the increase in the pipeline is, you just mentioned where that's going, but the increase in the order book of that 19%, where are you specifically seeing the flows of money going to that order book?
Okay, the order book's grown about 30% year on year and 90% as a half to now. And the big order intake in the last period has been in the renewable energy space. So we've won 3 of the large turnkey renewable energy projects. That's in wind and in solar, as well as the fact that our buildings business is beginning to gain back market share now after being through a few difficult years of execution issues. So we've really become a blue chip again in terms of building market, and we're finding the developers are responding positively, but also the public sector. We've been doing quite a lot of healthcare and that sort of thing for the public sector. You'll see the buildings order book is nearly 50-50 public and private. So that's good in terms of the go forward situation. We have a foot in both camps, if you like.
When it comes to investments and concessions and infrastructure and concessions, they're looking at operating profit and those second and third most important operating profit drivers, both slipping back. I mean, what's happening there and what is your strategy when it comes to that part of the business?
The investments and concessions, whilst it may have slipped back, it's still very much within the guidance. And it's still high margin business for us, so we don't sort of sneeze at that. But
certainly high margin business. I mean, over 22% profit margins.
Yeah, it does go through cycles, and it's comprised of a number of things. One is the operating revenues, which is long-term operating sort of contracts, like for example, sort of toll roads and the like, and that might be 20 years, so a long line of sight. The other is where we're actually investing in, and we have a fair value adjustment in terms of the valuation of that asset. And the third one is when we're in new projects where we're actually supplying equipment in terms of tolling systems and so on. That's when we get a spike in the margin. So when the margin peaks, it's when all three are actually in unison, and when the margin comes off a little bit, it's because we've only got 2 out of the 3. And in the last half, it was 2 out of the 3. So absolutely normal. And very happy with that business. It's a big driver for us.
Yeah, interesting also that you've not made a provision for the Competition Commission potential fines. Why is that?
Well, as we've tried to explain again today in terms of our presentation, Group 5, perhaps a little different to others in terms of the fact that you're going back to 2008. That we took the Commissioner's investigation into the industry very seriously, and the first thing the board did, in fact, the executive of the day, was to launch a very invasive investigation into what Group 5 had been doing over decades. And that was under oath, so we put through a large portion of our staff and senior management through a process that was quite invasive. And we established so what had been happening in the organisation and in the industry, and we were clearly at risk. So we wasted no time in going to the Commission with our information. And so we became the first large construction group to actually make its declarations. And in return for that, being first through the door, one gets an element of leniency. Mm-hmm. So we are the leniency candidate. And in fact, in all the matters which we put to them, we're the first candidate. In other words, we're first through the door. And that means that we have sure leniency for all those matters. So we have cooperated and assisted the Commission for the last 4 or 5 years, actually, in terms of their investigation. And halfway through that process, they launched their fast-track process, which is as a result of quite a lot of the base of the information which we gave them in earlier years. So we think we've been a major force in terms of assisting and driving the cleanup of the industry. That said, of course, there's no guarantees until this investigation is finished, and that we believe is probably some weeks or months away still.